And thank you for staying tuned. Before we talk aviation, the International Monetary Fund is worried about rising debt in Africa, with about 40% of countries on the continent at distressed level. The managing director, Kristalina Georgieva, says debt levels in the region have been rising as governments struggle to collect and grow revenue while increasing their budgets. South Africa's ratio is projected to reach 81% of gross domestic product by 2028, and Kenya recently doubled its debt ceiling to match the size of the entire economy. And South Africa's headline consumer inflation slowed to 3.7% year-on-year in October from 4.1% in September. And data from Statistics South Africa shows that on a month-on-month basis, price growth was 0.0% versus 0.3% in the previous month. And the Republic of Ghana and Boeing have signed a provisional order for 3 787 Dreamliners at the Dubai Airshow. Ghana intends to launch a new airline in which the government will hold a 10% stake and the rest will be held by the private sector. And the global airline industry has experienced some of its safest years ever in terms of fatal accidents recently. Well, despite a number of crashes, however, the long-term improvement in its risk management record is challenged by a growing number of insurance claims and risks. Well, this is according to aviation insurer Alliance Global Corporate and Specialty. In its new report titled Aviation Risk 2020, Safety and the State of the Nation, the leading global corporate insurance carrier also notes that despite record numbers of over 4 billion passengers globally, flying has never been safer. Well, let's bring in one of the spokespersons for Alliance Global Corporates, James Van Meter, to unpack this report for us. He joins us from Atlanta, Georgia via Skype. Good morning, James. Thank you for joining us on the show.
Good morning.
Right. So what is the major thrust of your new report, Aviation Risk 2020?
So the report focuses on safety developments in commercial aviation around the world. It identifies a number of insurance claims trends which are impacting the industry, including the top causes of financial losses that we're seeing today. We also highlight a number of risk trends and challenges that will impact the aviation sector and insurance landscape in the future. As part of the report, we analyzed over 50,000 claims with a market value or claims value of around $16.3 billion.
Your report notes that 2017 and 2018 are among the 3 safest years of the aviation industry for fatal plane crashes. What drove that safety seen in those years?
So there are a few factors that led to that finding, and a few things that have impacted the safety record during those years, including better technology in the aircraft, new manufacturing procedures, new engines that are much more reliable than engines were in the past, better crew resource management training, and other technological advances like fly-by-wire technology, which helps control the aircraft more consistently and safer.
The report also says that fewer fatal accidents, but growing number of costly claims for the aviation industry and, of course, insurance. Now, claims from what and how worrisome is this situation?
So while we have seen the safety numbers vastly improve and unfortunate fatal major catastrophe accidents are way down, we are seeing a growing trend in the number of aviation claims that happen. And these are claims that happen every day: ground handling incidents, foreign object debris incidents, wildlife strikes are a major part. Our study reveals that the average wildlife strike to an aircraft today can cost more than $360,000. And it's not unusual for us to see collisions with birds or other wildlife that cost into the millions of dollars. So while aviation is safer than it's ever been, it's better to be part of the general public today flying than ever in the history of aviation. It's costing aviation insurers much more money as these aircraft are more expensive, they're more complex to fix, and we see a growing number of non-major catastrophe claims.
All right. Now, your report looks at global aviation industry. How much of these claims come from the African countries, particularly Nigeria?
We see the air traffic in Africa and the African countries continue to grow year over year. More and more passengers are flying. We see double-digit growth in the continent of Africa. Along with that growth, there's obviously more aircraft flying, more aircraft in the sky. And we do see a growing number of claims in the African continent, mainly due to, again, those ground handling issues and collisions with wildlife and weather-related incidents. Fortunately, not as many major catastrophes and fatal accidents.
Right. Now, the airline sector, of course, is going through some kind of turbulent times. We have South African Airways risking liquidation, Italy's Alitalia finding it difficult to find new investor, and Germany's Lufthansa being threatened by strikes again, and so many others. What is the outlook for the global aviation industry?
The global aviation industry as a whole is continuing to grow year over year. More and more people want to fly. They want to be connected. They want to be in front of their clients, in front of their family. So we are continuing to see more and more aircraft deliveries. Along with that, raises some issues like pilot shortage. That's another one of the growing trends that we identified in our report. More and more aircraft in the skies need more and more pilots. And we're definitely hitting an area in the aviation history where we're running out of pilots, and there aren't as many pilots being trained as are needed to fill the cockpits.
Thank you for your time, James, and enjoy the rest of your day.
Thank you very much. You too.
Right. And now for updates on the trading day today at the Nigerian equities market. Let's talk to my colleague there, Temple Ashaju. Hello, Temple. Well, can you bring us up to speed with how the market's doing at this moment? At intraday, we saw the index actually doing well. Has that changed, or is there an improvement on that?
Well, there's been an improvement. We see the market over, reckoning some 1.04% now. We've seen these gains cut across the oil and gas, the banking stocks, and of course the consumer goods side of the market. The consumer goods side is represented by the gains we've seen around the Nigerian breweries, which has crossed 52 naira. And of course, the counters of UBA as it maintained some momentum of the gains it recorded from yesterday and the day before at this point in time. Some huge volume of transaction is what we're seeing right now in the market. Traders are even surprised because they had actually expected that today the level of volatility that we saw yesterday and of course the day before will still be maintained today. However, what we're seeing is more demand. I think the volume of transactions so far today has really been impressive. Of course, it correlates with the level of value that we've seen in the market. So we continue to see high demand, huge demand in the market, in spite of the fact that we have a primary market auction on the bond side of the market today. I think about 150 billion naira is being actually offered by the debt management office today, but that didn't change the sentiment of investors or the appetite that investors have for equities at this point in time, which is really impressive. So the one of note here is the fact that the banking stocks are gaining. Investors are even beginning to also show interest in the corn oil, for example, which is oil and gas stock in the market. And we do hope that this level of optimism and, of course, sentiment in the market will continue till the end of the week, Chimeze.
All right, so we're hoping to see a positive close today. Looking forward to that. Thank you, Temple. And finally, oil prices slipped for a third day today as a surge in U.S. stockpiles reinforced concerns about lackluster global economic growth, while hopes ebbed for any movement on the U.S.-China trade war. Brent crude futures were at $60.71 a barrel, down 0.3%, while West Texas Intermediate crude futures erased early gains to be down 0.1% at $55.15 a barrel. And that's a wrap on the show. Thank you for watching. I'm Chimezie Obi Iwago.